What's up, crypto trading family? We're always talking about how macro moves margin. So today I want to talk about crypto derivatives and just the macro, just the global economy, right? So, and why this actually matters in leveraged crypto markets. So in a world where, you've got crypto derivatives, particularly perpetual futures, your margin isn't just affected by BTC's price action. It's also driven by macroeconomic forces. For example, Federal Reserve decisions, Treasury yields, dollar liquidity, the global risk appetite, ripple across traditional finance into Web3 markets, for example. So understanding this macro derivatives connection is actually crucial for serious traders who are looking for an edge. If you want to know more, make sure you stick around to the end of this video. Also check out the links down below for the platforms that I like to trade on. Right, so let's talk about Fed rates, Treasury yields, and let's say BTC futures and the correlation there. So interest rates do shape everything, right? When the Fed hikes rates, risk appetite, assets, we consider crypto risk assets here, typically see reduced flows, increasing also the cost of leverage, and also reducing BTC futures open interest, right? So when the Fed cuts rates or injects liquidity via QE, traders flood into high beta assets, and crypto perps are often first in line. So there's a correlation there, for example. So that is rising Treasury yields, equals lower BTC open interest, and then rate cuts or QE, there's higher open interest, and also just a risk on sentiment. And then we look at liquidity flows, so stable coins, DXY, USDT dominance. For example, crypto doesn't exist in a vacuum, right? So liquidity entering the market often arrives via stable coins. So you need to watch for these macro clues. The US dollar index, the DXY, a weak DXY is pretty much easier global dollar conditions, crypto inflows, right? Right now, the DXY is trending downwards, and you're seeing crypto beginning to hold. And USDT, USDC supply is something to also look at, because increasing supply, it just means more fuel for derivatives. And then you've got USDT dominance in futures, collateral, more USDT equals higher leverage appetite, right? So you also have kind of a BTC futures open interest versus the Fed policy, right? QE. And you can see here from this chart, and kind of just seeing the relationship between BTC futures open interest and the shifts in Fed policy, right? So there's always something to definitely pay attention to, and these cycles can pre-signal tops or bottoms in leveraged positioning across exchanges like Bybit or xt.com or Bitunix. If you want to trade on these platforms, check out the links down below. Get yourself some bonuses as well while you're at it. But when we're looking at strategy and just how to hedge risk, or macro risk with the derivatives, you have a pro trader checklist, obviously, using BTC or ETH options to hedge downside risk is one of those. Considering calendar spreads during high macro uncertainty, and also long volatility ahead of FOMC or CPI announcements, and using inverse perpetuals, for example, G-Trade, or using one of my favorite exchanges to use for that, to hedge your spot bags without actually selling. So some of the best platforms with best macro analysis dashboards may be Bybit, with real-time open interest funding rates, economic calendar integration. xt.com has those funding heat maps and dollar liquidity trackers. Bitunix has the smart macro alerts and stablecoin inflow metrics. So macro sentiment trackers for traders that are also good to use, the tools to pretty much gauge the global vibes, right? Crypto and fear and greed index is one of those funding rate aggregators, inflation swap focus dashboards, DeFi stablecoin supply trackers like a June dashboard, right? That all kind of helps. So I think crypto derivatives are just something that's really going to take over the crypto markets even more as we progress further into this bull market. Once we start to see liquidity conditions start to loosen, because they are deeply intertwined with global liquidity trends and macroeconomic decisions. So the more you track macro, the smarter your margin gets as well. So if you want to get started with margin trading, make sure you're using the right platforms. The links are all down below, okay? And if you want to get into my mentorship program, go to DeFiCodes.com. If you want to get my DeFi manual, which is at DeFi Millionaire, DeFi-millionaire.com. If you want to buy my books, go to Tokenized Trillions or Blockchain Applied. You can learn more about real-world asset tokenization on the blockchain and the different use cases of distributed ledgers across multiple industries. But if you're really someone who loves to have fun with crypto, then you want to check out smart contract bits.xyz. It's the premier platform for Web3 wagering. If you like iGaming, crypto sports betting, and whether that's rugby, basketball, soccer, football, hockey, tennis, boxing, which I love, MMA, all of that good stuff, man. You've got so many markets. The platform is powered by Azure smart contracts. The most deep, liquid, decentralized betting markets that are out there. It's a non-custodial platform, so you don't even need to give anyone permission. There's no middleman. You pretty much access the markets through the front end. Go to smartcontractbits.xyz and tell your friends about it. It's one of the best premier platforms for no KYC sports betting in the space. But of course, guys, make sure you do your own research and like, share, and subscribe. Turn on the notifications. I'll be seeing you in the next videos. Make sure you check out the links down below. Get your bonuses and all the best. Peace. Stay safe.